Hey, what's up, traders? My name is Rainer, and welcome back to this week's market analysis. So recently, I got a comment by a fellow trader called Lemming. He said, "Rainer, can I ask you something? Does your hair grow?" So I thought that was damn hilarious because he was asking me whether my hair grows, and the truth is, yes, my hair grows. And the reason why it doesn't seem to grow any longer is because I cut my hair on a pretty regular basis. I cut about once every 3-4 weeks. So this is why you notice that my hair, it's always like this. It doesn't get any longer. That's kind of like the maximum I'm allowing it to get to. Because any longer I find it to be very cumbersome to maintain. So I rather have short and sharp hair. So this week, alright, so this week back to the markets, alright, we'll be looking at a few products, right? I like to look at this particular metal because it's been selling off over the last few weeks and not many traders are actually talking about it. So we'll look at it. Also, we'll talk about a few trades that I'm currently in, as well as we'll look at a few trading opportunities in the market. So all this and more in this week's market analysis. I'll see you there. So the metal that I'm actually currently looking at, and that I said is actually very cheap, is actually this metal called palladium. Palladium. So it belongs together with gold, silver, palladium, platinum. They're all in the same category. They're all metals. And please don't ask me what is palladium, because honestly, whenever I see the word dium, it kind of reminds me of Wolverine, right? Because his claws is made of adamantium. So don't ask me, what exactly is palladium, where it's from, blah, blah, blah. Because honestly, I don't know. I only know how to look at the charts, look at what is low, what is high, and just place my trades from there. So that's one thing aside, right? Disclaimer. So let's look at it, right? This is the weekly chart of palladium. And the thing interesting is this, right? It has been consolidating for quite a number of weeks now, right? We have this high over here, and this is the low of the range. And what happened this week, or I would say what happened over the last 5 to 6 weeks, you notice this sell down that has occurred. And I don't think even any traders pay attention to it. Maybe those who trade metals, but you look at the media, nobody is talking about palladium because it's I would say it's not really interesting like the currencies or the stock market. But this product is actually offering some trading opportunity towards the downside. So let's look at it, right? We notice there's this 6 lower candles over the last 6 weeks, right? 1, 2, 3, 4, 5, 6. It sell off for 6 weeks in a row, and this week it broke off the low of the range. This candle, it broke out the low of the range over here. This candle. So it's pretty significant if you ask me, because it's now currently right now trading at multi-year lows, the lows of 2015, the lows of 2014. And if you look, where could it potentially, I would say, trade to? Honestly, I don't really want to predict where you go to, but obvious support levels that's coming up is about this over here, over here, over here. So that's just some visual levels to take note of. But the key thing that I would rather you pay attention to is where can you actually look to get short this market. So looking at the 4-hour chart, what do you see? Pretty much the pattern that I always show you, right? The 20 and 50 period moving average. You notice how price is testing the 20, the 20, 20, and here it fails to test. And so if you ask me what is the next trading opportunity, there are 2 ways you can go about it. From the looks of it, right? First thing is, if it retraces back towards the 20 period moving average here, it's a shorting opportunity. Stop loss can just go higher, right? Perhaps at a 50 period moving average or 2 ATR. That's something that you have to decide for yourself. Or likewise, the third way you can go about it is to trade the breakout, because if you look at it historically, the breakout seems to be working pretty well in this product as well, right? We have this consolidation here, then price break lower. We have this consolidation here, price break lower. Then we have a recent consolidation here, and price break lower. So there are 2 ways you can go about it. You can either look to trade a pullback or trade a breakout, and they all have their pros and cons to it. And I believe right? If you want to trade a pullback, there are times whereby you may not get filled in the market. But what the thing is going for you is that you have a good trade location. Compared to a breakout, you will definitely get filled at the market, but you may not be trading at a very good trade location. So there's always pros and cons, and this is something that you have to bear in mind. So up next, let's look at the New Zealand dollar. So I think you know, right? Last week, I was short the New Zealand dollar. So basically on this 4-hour chart, I said that initially I traded this breakout. Price traded lower in my favor, and next thing I got stopped out. And when I got stopped out, I went short because price was at resistance once more. I went short, and this week, yep, it went in my favor. But the kind of price action I'm seeing is is lackluster, right? There's not really much strength, but rather it's telling me that, yes, price is drifting lower, but doesn't really show me much conviction that the bears are really in control this week. So nonetheless, I'm still in my trade. My stops is currently somewhere here, about here, right? Because I'm taking a reference from this swing high and giving it some buffer, so I put my stops somewhere around here. So I've trailed my stops, so currently in the money a little bit. So, but for copper, let's look at copper this week. Copper is a little bit more interesting because on the forward chart, you see that the move is much more sustained compared to New Zealand dollar. So we see that, for traders who are not on the copper trade, I would say, again, any retrace back towards this zone, it's a shorting opportunity. So for me, I'll be looking to scale in my trades, right? Scale into this copper trade. I got short somewhere around here, right? Last week, if you recall. So right now, this trade is running, so I'll see what happens next. So I'll be looking to scale in if price give me the right setup. So another thing I'd like to share with you is a trade that I got stopped out. Let's look at soybean. So soybean, I'm not sure if you guys recall, about 1 month back, maybe 3 or 4 weeks back, I said that, soybean on the weekly chart, you see that there is a lower high, lower high, lower high, lower high, and supported by this support over here. Then I said something like, there are two things that will probably happen. You see that you're going to get number one is a real valid breakout, or number two, you're going to get a false breakout. And it looks like this week what we had is a false breakout. So I got stopped out of my trade. So look at the daily chart, I got short somewhere here at the low of this swing low. I got short here. Stop loss was somewhere around here. So price went in my favor, So what happened is that if new traders were trading this, they'll be so happy, over the moon. Hey, look, Rainer, woohoo, I'm in the money. Look, all this bearish candle all in my favor. And if you're gonna let your emotions, make you feel happy, make you feel sad, then the next move, which is this, it's gonna make you a pretty unhappy kid. Am I right? Because you probably have gotten stopped out, and you'll be feeling very, very sore. So again, as I've been repeating for quite a while now, the outcome of a trade is basically random in the short run. Don't let your emotions be, I would say, affect you. How you're feeling in the short run, whether you're happy or you're sad, because it's gonna be very emotionally tiring on yourself. And not only that, it's gonna be affecting others around you as well, your family, your friends. Imagine you go out with them, you hang out with them, and one day you're feeling so gloomy or so sad. Hey, what happened? What happened? Oh, I got stopped out. Then next day, you're so happy and cheerful. They ask you what happened. Oh, I'm in profit. It doesn't really make sense if you ask me, am I right? There's no point being happy or sad just on an individual outcome of your trades. There's absolutely no meaning. So that's my point I'm trying to get across. So last but not least, let's look at the pound pair, right? The pound New Zealand. Oh boy, look at this. This is a rocket, if you ask me. This is rocket, and I'm not even part of this move. And part of the reason why I'm not long the pound New Zealand, because if you recall, I was actually short the New Zealand dollar. So it's basically pretty much there is a correlation between the two. So I would say that was a partial reason why I wasn't long. But I should have been long, but just long at a smaller size, if you ask me. That would be what I've done. So another reason why I'm not long is because there wasn't any trading setup for me. So on the 4-hour chart, right, I was actually anticipating for a pullback, back towards the EMA, but it just didn't happen. So it just went against me. So maybe this week, if it does retrace, I'll go in with a smaller size because I'm already short the New Zealand dollar. So I'll be watching if this area is an opportunity for me to get long. So another thing that is worth watching is actually the pound yen. Because look at the pound yen, the weekly chart is also pretty much very bullish. And the longer term trend of the pound yen, if you ask me, is even more sustained than the pound New Zealand. Because if you look at the pound New Zealand, the weekly chart, you notice that what happened is that it had broken out of a very long term range recently. So that's why you see this very strong surge of volatility of the move, because usually when price has been ranging for a sustained period of time, the breakout is going to be very, very strong. So compared to the pound yen, it's not breaking out of the range, but rather it's been in a sustained uptrend, right? You see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Yeah, you get a drift. And recently it broke out of the recent swing high. So the move isn't as strong as the pound New Zealand, but if you look at the grand scheme of things, right, the longer term trend, it's actually still very beautiful. So again, if you're looking for trading opportunities, I would say the 4-hour presents an opportunity as well, right? A pullback towards the 20 and 50 period moving average is something that you can consider and look at. But be careful, because you notice that in recent times, right, the 50 tends to get breached here, here, and here. So if you ask me, I would say, for those price action trader, you may want to look for bullish price action before you get long. For those more aggressive one, you want to take note that, those 50 EMA tends to get breached by quite a bit. So you may want to, have further plan of action rather than just blindly queuing in the zone. So, and if you're trading the pound New Zealand or pound yen, you have to always take into account correlation, because I think a few traders ask me, say, what happened if, they're currently short New Zealand dollar, they're long pound New Zealand, but basically you're just short New Zealand. So there is a correlation between the different currency pairs. So you need to take note of it, because you don't want to be, for example, your usual risk is, say, 1% a trade. You don't want to be firing off 1% on New Zealand dollar. You don't want to be firing off another 1% on pound New Zealand, and you don't want to be firing off, say, another 1% on Aussie New Zealand. Because basically what you're doing is you're going net short 3% on the New Zealand on the New Zealand currency. So you're basically, amplifying your risk. So if you want to trade correlated pairs, I would say, reduce risk on the subsequent pairs you're trading. Say, for example, you are usually risking 1%, but you notice there's another correlated pair that is offering a decent setup. Perhaps, going smaller, maybe 0.3%, or the max I would suggest is 0.5, right? Try not to go anything higher, because, like I've said earlier, you'll be just amplifying your risk, and it's not something that I would encourage. So that's all I have for you, boys and girls, in this week's market analysis. I hope you enjoyed it as usual. And if there's anything, feel free to leave me comments below or drop me an email. I would love to hear from any of you, all of you, right? With that, I wish you good luck and good trading. I'll talk to you soon.